While we all knew as stock traders and investors that 2024 was going to be marked by the US elections, we could not have predicted what just happened over the last 24 hours, and it's leading into huge movements across markets this weekend, including many people questioning whether these breakouts will continue. Well, in today's video, we have some data that may actually resolve what's been happening in these markets already and why the breadth is improving across the board. We'll also be talking about precious metals and how they actually might be shaping up over the next few months, and some of the biggest breakouts that we've seen already happening and possibly happening soon. It's a wild day, guys, and we need to talk about stocks, commodities, cryptos, and of course the news around the world. Let's get into it right now. Well, welcome back everybody to the special weekend edition of The Daily Show. My name's Tom, and today we're discussing everything from the macro to the data to the lead indicators and of course the hottest charts. Many of the things we discussed last week, including the breakout of AMD and Intel, ended up continuing. And of course, post CPI, we're now expecting an improvement in breadth across the markets. If it's your first time here and you want to know more about how to figure out where Wall Street's biggest trades are, remember to subscribe and smash that bell icon. In today's video, we'll be covering everything from the earnings season kickoff to what's going on in the precious metal markets, the new opportunities, and of course, the big news over the weekend. How will it impact all of us leading into this US election? So let's discuss the big bank quarterly results to start off with. Now, Jamie Dimon was coming out and saying all sorts of things, including that he expects inflation to start picking up again, and there were some other problems that he believed. But really, signs of consumers slowing down and falling behind on their bills was being weighed down on the shares. We saw Wells Fargo fall around 6%, and of course, JP Morgan fall around 1%. Now, in general, I think that they performed pretty well. And what we're really seeing here is probably still the creation of debt. Basically, these banks are being emboldened to lend and they're being kind of rewarded for it. And I would expect lending to continue to shoot up even though high interest rates are around. Are the American consumers starting to struggle? Well, yes, it looks like that's kind of what's happening across the world. But at the same time, people are borrowing to live their lifestyle. And I expect that to continue. And I think a lot of us have talked about it for a while. So let's discuss this chart here from dailychartbook.com. And basically it is new highs versus new lows. 1 month, 3 months, 6 month, 12 month, a huge improvement in thrust. And you don't tend to see something like this without usually getting further follow through. And it has a lot of people asking the question, why is this occurring? Well, it's becoming clear that maybe CPI is coming under control. Things like shelter improved for the first time in pretty much 13 plus months. And we also saw, of course, CPI just lower across the board. And this brings into question whether we're going to get a rate cut in September and another one before the end of the year. And it's also bringing up and notching up more chance of recession probabilities. Generally, it's considered that the Federal Reserve will not cut rates unless the economy is slowing by enough for them to say we need to step in. And you'll notice that when they've done it in the past, it's often led into recessions, which is, of course, what a lot of people are starting to expect. But in today's video, we'll talk about that a bit more together. And I think one of the key things here is it's now become a 93% chance of a cut in September, according to the market. Now, they've been wrong several times here. And the number of rate cuts this year is now sitting at 2. So let's talk about this chart. We've got to bring out the chart that really is what happens after a rate cut. So a lot of people expect that a rate cut occurs and the market just tanks and it's a recession and everything goes bad. But that's not really quite how it works. And you can see here, Ritholtz has a great chart showing you a cut with recession over the next 12 months and a cut without a recession over the next 12 months. Now, I think the key here is going to be when we do get the cut, we are coming off, and we will be eventually coming off, an inverted yield curve. So that is the US 3-month and 2Y are all inverted with each other, and they've been inverted for one of the longest, if not the longest period ever in history. And this basically tells us there's something wrong. And the bonds market is not usually wrong on that one. So there are several occurrences, though, where the markets continue to go absolutely bonkers for quite a lot longer. In fact, they go over a year and they end up in recessions, but they end up going very, very nicely into it. And I kind of expect us to be something like this. If you've been watching the channel for a long time, you would know that I kind of feel like there's a recession probably coming somewhere in around 2026. Now, I have many different reasons that we'll discuss over the next coming year why that could happen, but it doesn't mean you need to be terrified of the markets right now because, of course, we're still seeing a series of higher highs and higher lows, and we're being driven by AI. So really, as long as we're in an AI bubble and people keep calling it a bubble, then it usually will continue on. Of course, we like to see those things, and you'll see a chart later on today's video, which we've been discussing for quite some time, that really shows there should be some more length in it. But what about this sector's relative performance versus the S&P? It's a Goldman Sachs chart, and you'll notice that they have now started to change some of their sectors. They're buying utilities, they're buying energy, they're buying staples and healthcare, and they're super overweight in these particular areas. Also being pretty heavy in financials. And we've discussed this for a while, and we've got hooks in things that they're starting to go overweight in. We've got energy starting to improve, healthcare improving, utilities improving, real estate coming out of nowhere and really improving in the last couple of sessions. And of course, financials still holding up very nicely when it's compared to the S&P versus what Infotech is doing. And it starts to suggest that we've got a broad-based asset valuation change here. And you'll notice this Grant Hawkridge chart is really showing the same thing. In just a few days, we went from 6.3% overall percentage at 1 month highs for small caps to 44.2% at high 1 month highs. That's a big broad-based switch, and that's happening really in all of the markets, but more importantly in the small caps. And this led to IWM having a monster breakout, which we'll discuss later on. So where are the best sector returns? Well, unless you've been living under a rock, you're probably pretty clear that information technology has been the best places to be at. And anyone that's really predicted that, especially over the last 6 months, is not that impressive. The moves that we've seen this year, though, have been really impressive in certain areas. Financials doing really nicely, consumer discretionary obviously improving over the last month, which we followed together. And of course, we've seen utilities and also energy and a few others come up several times. So what's happening right now? Well, it looks like different markets are starting to come through, and real estate just overtook the S&P for the last 1 month of returns, and it's showing you this real broad-based rally is starting to come through. Percentage of advancing stocks versus declining stocks are not necessarily in the sectors that you would think. Basic materials, 97% advances, utilities, 95% advances, real estate, industrials, energy, financials, all of these sectors really coming up, while technology is starting to weaken. And this is what you'd want to see if you're a longer term, medium term bull. So it's been a while since we've discussed Wayne Whaley's data, but he's got a good one here because his toy hat trick is at it again, and he's discussing the idea that July 15th to December 31st this year may be quite historically positive. A 23-2 run in the case of the bulls, further strengthening the case that we also might have a high breadth market. You know, the interesting part about all of this as well, it's also saying that between August and September is if we're going to see weakness, generally where we're going to see it. And as you may see in a moment, the VIX has also been agreeing with that, expecting a lot of volatility into this US election coming off realistically the next couple of months. And after the events of this weekend, that makes even more sense, which we'll talk of in a moment. S&P 500 over 10% in consecutive quarters. We already know this usually means the next 12 months is going to be relatively positive. And that would also line in with, even if we do get rate cuts, for us to probably go one of those curves that looks positive initially and then maybe ends up with an uninversion of the yield curve itself and some problems on the horizon. We'll go through why we expect that very soon. So what about this earnings season? Well, we know that things like energy are starting to really show breakouts. Financials are coming in okay, and utilities are already on Goldman Sachs kind of like overweight records. So are they being traded at fair values? They're still underneath where you would expect them over the long term, whereas information technology is obviously a lot higher. So what happened this weekend was absolutely wild, and it was very sad to see, of course. But what it's led into is some massive movements in the overall election race, with, of course, the betting agencies moving it now to a 70% chance of an overall Republican win. So this is leading into some pretty wild moves in the markets. And of course, it leads us also to the question of whether this was already happening underneath the hood in terms of Republicans were strengthening in terms of this US election. Why? Well, the Russell 2000 was starting to improve. We also saw domestic US sales versus non-US sales improving, Republican policy basket pairs really going ballistic, And in expectation, you would usually see financials and energy start to also outperform, although they haven't yet, but that might be about to change, in particular for the energy market as we see the kickoff of this earnings season. So what about the big ones? Well, this is the current reads in terms of forward overall earnings, and you'll notice Nvidia is trading at around 47.3, which might seem high until you realize around 45 has been its kind of like 5-year average when it comes to forward PE. They all have to live up to expectations, but you'll notice some of these are getting lofty, and still Google, which is one of our 3 pillars, is trading quite cheaply when compared to its peers. And you'll notice here you are really getting some good results from Google when you compare it to Amazon, Apple, Microsoft, or Nvidia. Plenty of upward space still left in that stock, which we'll look at coming into this earnings season. Speaking of earnings, plenty of kickoffs here. We've got banks starting off early on the week, and then we go through to, of course, Netflix, which will be the one that everyone looks at because it's a technology stock. And we've got plenty of different companies, but do be aware of the implied moves. This is going to be another wild earnings season of plus minus 9, 10% moves coming out of pretty much everything that's technology based. And you'll see here Netflix is no different with a plus minus 9 coming in this Thursday. We're looking forward to covering that one. Earnings estimates all improving at this stage. You'll notice 2025 is really where the market's getting hyper excited for, and that's leading into things such as 6,000 or even higher on the S&P being called by many analysts. And a lot of analysts are upgrading into this earnings season, so we'll see whether they continue upgrading afterwards and if that helps breadth. Now, VIX term structure, we mentioned before that we already expect volatility earlier this year. That's because that's kind of what happened last election. August, September, we saw volatility really spike up, and we know the VIX structure over here on the left-hand side is also predicting that. So with everything that's transpiring at the moment in the US election, we would expect volatility, some kind of random stuff in markets to start to occur. And also with Wayne's information, it kind of shows you that August and September are going to be where we're looking for buy in the dip style scenarios. So what about the other opportunities on the markets right now? Well, there are plenty of them. And you can see here that junior miners are really starting to see an improvement on the charts, along with gold miners, which we've expected for quite some time. And if you've been watching this channel for a while, you would know that I am very bullish on gold and silver, and I believe that both will do very nicely over the next 12 months. Now, this one here from Octavio Costa basically is a interesting idea, and it's what I kind of expect. We've probably experienced what we call a lost decade in gold investing, and you get this quite a lot. It happens in most investments, and it is also something that could be happening to the indices in the future on the US. So this is something we'll have to consider, especially if they remain incredibly concentrated leading into what could be a crash in a couple of years. So what kind of bullish catalyst do we have here? Well, of course, we've got falling gold production. That's happened pretty much every time. We've got central banks accumulating gold thanks to China, Russia, etc. And we have all sorts of other reasons. Now, you can throw a lot of different reasons to why you might like gold. The real fact is here we are in what we call a currency war. And when you're in a currency war, gold is the go-to. And I think it probably trumps most of these other things here. And it does come back to central banks buying gold. That is probably one of the most important factors. And it's showing up on charts all over the place, including this gold to silver ratio chart, which we've talked about many, many times, or silver to gold, which in this case is showing gold weakening versus silver. So in general, what's that telling you? Silver is starting to play catch up. We've shown this chart several times on the channel, and we do believe it's there. The prime book has also been improving for materials across the world, and this is leading into things like copper, metals in general, everything kind of starting to show a little hook turn off the lows. So we mentioned before that we're probably in the late cycle of investing. That is the final couple of years where everyone gets hyper and absolutely FOMO all over the place. Now, this is kind of the way that we are trajectorying at this point, and we think that the markets should go into 2025 basically bullish, and most stats lead into that. In fact, the next stats for the 12 months lead to dips being mostly bullish at this case. Now, could that change? Of course, but at this point, especially if the Republicans do win, there may be even some tax overhauls, which could bring in a really FOMO-y market. So this all could start to come through as we see it all play out. Now let's talk about rotation. We saw clean energy and solar show improvement. They have been improving. Really excitingly, we saw home builders coming through, which is good for the bulls. So of course, if you're a bull in the market, that's the type of thing you want to see come in. And gold and pretty much everything across the board was up. Although gold was, of course, really like a little bit lax on that day. And that's because it's had such a great 5-day and 10-day run. You'll notice here that home builders really benefited from the CPI numbers. And across the board here, there's been some great gains. But notice that things like technology are right down the bottom along with communications. And that's showing rotation. So rotation is clearly here in these markets right now, guys, and we'll need to be continuing to follow this because it's giving us opportunities in other sectors. Let's go into the S&P 500. Was it bullish, bearish, or all over the place? Well, we expected to bounce on Friday. We got it. It actually ended up making a new high and it bounced back down. If you look at the dailies here, you'll notice the delta was negative, but overall the weekly still maintained a positive delta when this loads up in just a second. And really what that is telling us is it's showing us that the market is still net buying. And they are still net buying. And even though we've got that little sign up here showing that this is probably a little bit overbought, we kind of expected it to go for around 2 weeks. So this is week 1. We might see the markets go better next week, and we'll see whether the breadth can improve and then show that possible second pullback. There's usually 2 pullbacks a year between kind of 5 and 10%. Will we get a second one? Well, this is the level we'll need to watch this week. And it's going to be a clear break underneath around 55.75. If we do manage to get underneath that, then I think we could be moving more into the negative side, but on the small time frames, but still very positive overall. To really get a proper bear bust and a proper pullback, you need to close below 54.40, which at this stage, the market has certainly not done. Let's have a look at the futures market now leading into the week. Why do we say 55.75? It's pretty clear the options market also sees it that way. Puts all over that level, so that will act as a wall. And if it is broken, it will take us into what we call a negative gamma situation. So basically, if we break and close below 55.75 or get there near the afternoon, dealers will have to hedge their positions, and that could lead into, of course, downside. On the flip side of that, we do still have our positive gamma situation going on right now, which basically means that if the market keeps pushing higher and goes, the higher it goes, the more it's going to be offside. So it's going to keep pushing towards that 5,700, which remains the main target here this week, which is actually the OPEX week. So it's come around very, very clearly and closely. And this is, of course, what happens once every 3 weeks or once every month on the 3rd week generally. NASDAQ CTAs. Now, they've been increasing a little bit recently, again, kind of bolstering the market. S&P CTAs also improving, commodity trade advisors, and their momentum funds generally. And of course, we saw gold break up a few weeks ago, about a week ago, and that has led into a beautiful move. So we're still seeing gold react pretty strongly here in the bullish case. We're seeing copper weakening a little bit, but then that may show, because it's 1 day delayed, an improvement here, I think, in the next price action. And we'll have to keep watching Brent and oil because that went up really nicely, then pulled back, and Brent is still at a very important case. And we'll look at that level in just a moment. Let's move to Tesla. Tesla 250 this week will be the most important level. You'll notice on the expiration of the 3rd week OPEX, this is the big one. And if we get through 250, then of course that really brings in 280 as a target. So still Tesla looking good. If you watched our stats about 3 videos ago, you would know that generally when Tesla has done 9 days consecutive up, which it did, it does lead into a good 2-week period for it. So you still probably want to be more on the bull side than the bear side on something like Tesla if the price action does detail that. And we expected 240 to hold, and it did through the Friday session. Nvidia, on the other hand, it's struggling, and we suspect that we will continue to see some struggle from semiconductors, trapped between 140 and 115 at this stage. So just before we jump into the charts and we take a look at all of the key levels we need to be watching for the week ahead, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, depending on where you are in the world, Tiger Brokers may be a great option for you. Check out the links in the description down below. But for the Australian audience out there, you're going to get a couple of extra bonuses. US 30 worth of Tesla fractional shares and a $30 cash voucher, along with some amazing bonuses. And the best thing about Tiger Brokers is they're always improving their platform. We've shared them quite a few times, and they're starting to do some amazing things, including, of course, Really cheap trades, but on top of that, the introduction of a 24/5 market. Yes, you can now trade pre, post, and everywhere. And that's great for people that are outside of the US because, of course, it's very difficult sometimes to be awake during those times, especially when you live in the land down under. Now, another thing they've introduced recently has been options, and their great options platform now comes at one of the cheapest rates ever, US 95 cents per contract and a minimum of US $3 per order. So what are you waiting for? Check out the special offers in the description down below and see whether Tiger Brokers might be the one that's right for you. So let's now begin with the lead indicators of the charts. And of course, we'll start off here with central bank liquidity, which was improving across the board last week, leading into, of course, the rally itself, both the Fed and other central banks being quite accommodative if their overall liquidity. We also saw yields starting to drop across the board, and that spurred on another good week for treasuries. And we can kind of continue to remain the same thing here. If you've got a long term that is 12 to 18 month kind of window on treasuries, they're probably going to do pretty well. Why? The Fed will eventually cut as they're no doubt doing damage to the economy, and that will no doubt rise in treasuries. However, it's not really one of those trade things. You usually look at it and you say, okay, maybe you want to look at a longer positional history. And that's just because generally, guys, bonds are hard to trade and they're much easier to look at a minimum of 3, 6, 12, even 18 month kind of windows. Let's move over to some other good signs. ITB home builders started to improve greatly, showing a lot of thrust. That's a good sign for the markets. And of course, with yields coming down, that also forced the US dollar to come down as well. The dollar index pushing below the first bull support, almost finding no buyers here, and waiting now to possibly create a double top and a breakdown. This week's close is going to be huge. And at the moment, it looks like the US dollar is starting to fall, which is something that I've believed will eventually happen in a big way. And there's a lot of reasons why this is going to occur, which we'll talk about in another video. But in general, the US dollar is expected to fall down. You can also look at Stanley Druckenmiller's opinions on this, and he's been calling it for a little while at this stage. Let's move over to precious metals, though. Silver with a beautiful closeout on the week. Previously, that leading into, of course, some very nice potential moves here into the next week, and many people saying this is a breakout of a overall flag. I think personally, silver looks very, very nice. And of course, if you want to check out a ratio, you can always check out silver versus gold, and you'll notice that it's still trading about 0.013. Now, if you look back in history, about 0.015 is a much fairer price when considering where gold is. So this is the kind of price that you'd like to see silver get back down to. Now, remember, silver is more volatile than gold, and it moves more percentages, so that it will be something you need to take into consideration. Speaking of gold, we've loved gold stocks. Junior miners also breaking out. A beautiful close here, and it presents kind of like to a 41 at minimum, you would think, for gold stocks. So they're really starting to improve over the board. Now, gold also had a great week, and you'll notice here it bounced up. Beautiful weekly close last week, almost an all-time high this week, and I'd be liking to see a new all-time high over the next 2-week process. So can gold do it? It's been in entrapment for a while. It's been in a coil. And as we know, whichever direction it breaks, especially if it breaks on the upside, it's probably going to be a fairly explosive move. So certainly an opportunity for people out there, and gold stocks certainly front running the overall gold price this time around. Copper also found some signs of life after coming down to the 61.8 fib. We talked about the 20. It actually held it, if you can believe it, and came down to the 61.8, which is where you'd expect to see buyers. And this still is in the position of a turnaround towards the upside. And even though people have got concerns about slowdown in the economy and stuff, it does look like copper is trying to do its best. A breakout past 470 will be very bullish for this, probably bring a new high, and we're watching it incredibly closely over the next week. What about oil? Well, it also found a great bounce off that watch reaction here level we had, and we liked what we saw in terms of that. Wasn't a great Friday for it. It bounced up to this level and then sold off. So what do we need? Well, we really need a closure above 83.75. That would be quite bullish for it. But at this point, it still is quite good. And this is a worrying candle, but we'll see how that ends up after Monday's close, of course. Let's move over to energy stocks. They improved a little bit here on Friday and started to see some really nice positive signs. I liked them in the last video, and I still really do like it. A 92.20 bullish close above, that could get energy started to really play the game. So that plus oil snapping that rejection, they would be a huge news this week and levels that we will be watching as well. What about Tesla? 233 came down to the previous gap fill, filled that in, and basically we get a movement back up to 248. We knew that this was ran by pretty much options last week, and it got a pullback. The stats are in the favor of the bulls, and of course a 250 plus movement this week should bring us back into what we call positive gamma. So we're looking for a 250 plus. At this point, the trend is still in the favor of the bulls, and we'll be watching towards that. So of course, favor of the bulls. For the bears or people that are trying to push it down, you'd be looking at around 210. Let's move over to utilities. Beautiful breakout in utilities. Certainly looking strong now for quite a few sessions. We spoke about this in our Market Masters Club. If you're interested in joining, free 7-day trial down below, along with quite a few other stocks. But the utilities sector, the financial sector, and funnily enough, also the REITs here. You'll notice the REITs have started to really improve. All of those started to go last week. And that's leading into that broad-based asset movement, which is also consistent with semiconductors weakening. And again, that's what's happened. Semis versus SPY, you'll notice overall semiconductors not finding as much strength and leading into the idea that we might be getting what we call mean reversion, which is the pullback to the weekly 20, which would be a fantastic place to see semis at again because, of course, it could be an awesome opportunity for people who are trying to buy the dip. Same thing on NVIDIA. It's exactly the same kind of concept there. Now, where the big breakouts were, well, we got an alert for Tencent for the first time in a while, and we've suspected as of the last 2 sessions that Chinese stocks were on the improve. They certainly were. Big improvement here. You can see a 392 plus breakout. We've got HSI going ballistic all the way up to its first major resistance share trade, and effectively this is kind of pointing towards pullbacks being met by bull demand. Now, how will this trade on Monday? That'll be interesting to see, but in general, priced above things such as the 20 weekly moving average, the daily 20 also being snapped off, and a beautiful weekly close has us thinking that maybe the bottom, it's probably in at this point for Chinese stocks. So things are starting to improve there. Then we come over to the US market, the first breakout close high for IWM. We have a big red box on this. Why? Because it brings in the opportunity of movements to 222 and a fairly significant improvement actually in this. So about 3.39 at minimum, you would think now, based on this series of higher highs and higher lows. A huge breakout in the IWM, and that's leading into the RSP as well, the equal weighted market looking fantastic. So weekly closure on RSP, weekly closure on IWM, both showing real signs of strength. And when you compare that with the Qs, which will pop on the chart, they started to basically just do a long leg doji for the week. So it's kind of saying this could be a pullback in time, like consolidation, while the rest of the market starts to play catch up. And there's breakouts across so many market sectors at this stage. What about Bitcoin? Well, it's still struggling, but it could all come to a change over the next one day. And we talked on X about this, a closure above the 20 moving average, a closure above these 2-week highs. I think that's great for the bulls. And of course, the swing traders will be salivating at 64,000. So I think all of this is kind of pointing towards maybe the bulls are about to take control of this market once again. And this might have been the low that we're going to see. So it didn't quite get to where we had expected to, but this is a huge sign. So certainly looking towards Bitcoin breaking through and Ethereum breaking through and closing at a new strong high. And hopefully that does occur. Now let's move over to the news for the week. And you'll notice here we've got a bank holiday in Japan on the Monday. And then we move into, of course, the big news, which is going to be core retail sales on Tuesday, earnings season kickoff in the US, and everything that's going on in the US election campaign as well. Unemployment claims also coming out on Thursday, which will need to be watched. And then we go down for some other countries' retail sales. So it's really a case of retail sales and earnings living up. This is earnings week. This will be the kickoff of really whether we're going to see beats versus misses, and it's one to be watched. So remember to subscribe. Check us out also on X. And if you're interested in any of our courses to find out how we trade and how we find particular positions, then you can check them out in the links in the description down below. Also, check out Tiger Brokers, the sponsor of today's video, and see if they're right for you. Thanks, guys. Have a great weekend. Bye for now.